Hey traders, Raghee here, and in this recap video I'm going to walk you all through the trade that we took together in the afternoon closing session in the chat room. And I want to kind of step back for a minute and talk a little bit about the shift from my main multi-time frame view, which is what you're looking at right now, weekly, daily, 480, 240, 180, 120, 60, 30, 15, 5, right? Over to the day trading multi-time frame, which is daily, 512, 233, 144 tick, 5, 3, 2, and 1. Now, first of all, the question I get very, very often is, Rog, why so many time frames? The reason that I choose from these is they're all viable time frames to me, and I'm looking for clarity. So I eliminate certain time frames from contention based upon the way in which the wave, the grab, and propulsion behave. And then you can throw Darvis in there, but it really is a matter of clarity by way of the wave, grab, and propulsion. And we do the same thing on the longer term, my main multi-time frame, but the fastest time frame we have is just the 5. So every 5 minutes, which is pretty fast, every 5 minutes we make a decision about the propulsion and the wave and Darvis, but there's a little bit of the luxury of time, right? I've got 5 minutes in between each candle. But when you shift to a day trading mindset, and this happened in the afternoon, but you know, the 1 hour, and if you remember catching this recap right now, that 1 hour close today, if you want to know what day trading and scanning, forget day trading scanning, but scanning multiple time frames, I don't care what or how long they are. If you want to know what scanning multiple time frames is all about, check out today's closing session. It will absolutely bring a level of clarity that maybe you didn't have before. But I'll tell you all in the recap video now, for those of you that aren't members, one of the reasons that I like any trader to understand day trading meaning the speed of analysis, you know, because we're not day trading anymore. These markets are only 24 hours. Whose day is it? So now it's about understanding the rhythm of the trading day, the constant fluctuation of the price movement ranges, and being able to make decisions very quickly, being able to put orders in very quickly. If trading is the act of making decisions, day trading strengthens your decision-making muscle, because you know, you might have to make decisions based upon a 144 tick or a 1 minute chart. And just the quick, rapid nature of every candle coming out, and you're looking at propulsion and the wave and the Darvis and the grab, it just makes you sharper. And if you take that understanding for price action and flow back to a 15, wow, you know, this is something. I have one of my dearest friends is an Olympic swimmer, and I'll never forget something she told me. I said, how is it that, and she swims what's known as a splash and dash. It's the sprint, the freestyle sprint from one end of the Olympic-sized pool to another. She holds the American record. She's a, oh gosh, she'd kill me if she knew I forgot. 5-time Olympian, was the oldest member of the Olympic swimming team. And she told me, you know, when she's really in the groove, everything slows down. Right? So she knows exactly how many strokes it takes to get from one end of the pool to the other, how her hand has to enter the water, how it feels when she's pulling through. And when she's really in the zone, that whole process just feels like effortless in slow motion. Well, we can sort of build that same muscle with day trading, right? So I don't want to go I just hope you guys understand the framework for this. Do I like longer term time frames? Oh gosh, yes, gang. I love trading longer term time frames, but February 2nd and February 5th, Friday's sell-off, Friday's freak out, and Monday's meltdown. That's what I call it. Once that happened, we transitioned out of the buy the dip mentality. Not only did we transition out of the chop, or out of the trend into chop, the kind of chop that then developed is beyond what a lot of traders have seen for years, if ever. And that, in an effort to quantify and limit risk, became exactly when a lot of traders realized, oh, in order to manage this kind of, you know, day-to-day volatility and wide volatility and profit from it, the smaller term time frames do a really good job. So we took a short on the NQ, and some of the folks in the room took shorts in ES and YM. And let me give you an idea of how this started. First of all, what we always want to look for is a transition to consistent colored candles. And then you can add certain understandings of propulsion to that. Now, I like to see a minimum of 5 propulsion dots within an already established green or red market. In other words, I have consistent green and then 5 dots. Or I have consistent red and then 5 dots. Now you'll notice the consistent green never manifested here on the 5-minute. Okay, now if you go to, say, the 3-minute, it started to organize 1, 2, 3, 4, 5, and we think, okay, when we come back down to the wave, perhaps we can think about a buy. But the Darvis had already plotted, so if you decided to buy this, which would have been fine, you would have bought here, and this is your target. Now, for some traders, that's just not enough. By the time we got to the post-FOMC, and you'll see the transition that happened, and let's say you went ahead and took this, and it stopped you out. You would have basically taken a hit from about 68.60 to 62 down to about 54, right? That's where the validity of the wave is. So I'm not going to just highlight the great trades. Then what happened? Red, 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 red. And then what happened? I need 5 dots. 1, 2, 3, 4. There's my 5th dot. And do I have a sea of red? Yes. That means the next opportunity I have to short into a Darvis, to short into the 21 EMA or the 34 EMA, I will take. And that's when the games began. So going into the last 30 minutes of the day, we finally got our opportunity to short. Now, part of that session, and I wish I could share that with you. If you're a member, please check it out. It is well worth an hour of your time if you think this day trading thing is something you want to understand. What we did is we started to scan across multiple time frames. The tick bars were not helpful, so we dismissed them. They lacked clarity. The 1-minute, the 2-minute, and the 3-minute was then a matter of understanding propulsion, grab candles, and the angle of the wave. And once you know how to make that distinction, it became very simple. And what we did is we just shorted into the remainder of the day. And like I said, a lot of the members shorted ES with that same 5-dot and dominant candle type approach. And then some chose to take the YM. So quick shout out to Kyle. Hey, props, Kyle, because we were focusing on ES and NQ, and you went ahead and took that YM because you liked it. That's what it's all about. Being able to say, I get it. I need dots, I need grab, and then how can I capitalize on it? So you can really customize this approach to play whatever market you like, Okay, so that is tonight's recap video. Sorry it went a little longer, but I really wanted to address, I think, what is a question a lot of you have, which is, Rog, we're day trading now? Believe me, I know how to do it. I spent many, many years doing it, but I cannot wait till the daily time frames organize into the kind of clarity that I have loved throughout the last, 8 to 10 months. But right now, the day trading works. And a lot of you watched us just slay the close because we watched the dots. And then we had terrific follow through. I mean, let's also admit the market melted down and we were on the right side of it. And that's the key. All right, gang, I'll see you in the next update.